A very good evening to all our distributors and all our partners. So आज का call जो है we are organizing this so that we get a deeper sense of the Tata Multi Cap Fund and Tata Multi Cap Fund के बारे में हमको बताने के लिए इस fund के fund manager है Mr. Tejas Gutka and Tejas जी 2019 से he's been associated with Tata AMC. Before moving to the mutual fund management team, he was managing the PMS business for the Tata AMC, and then before that he continued to be in the PMS business in the past with companies like Tamora Investment Managers, and before that he was with Barclays Wealth as well. So Tejas comes with very strong experience in the fund management space, and he currently also manages the Tata India Savings Fund and also the Housing Opportunities Fund. So Tejas, thank you so much for taking some time to join us today, and we'd like to hear from you. It seems like it's the season of NFOs, so we'd like to hear from you the broad contours of this fund and also a little bit into your investment strategy and your style, and then we'll get into specific questions.
Sure, Anand. Thank you so much for that lovely introduction and a very warm welcome to all your viewers. So, multi-cap fund, if you see, I think multi-cap is in my mind a very interesting category. Normally होता क्या है market में when we look at large cap, mid cap, small cap, these segments go through their own cycles. And getting investors to invest based on these cycles has been an emotionally very difficult thing to do, right? I'll give you an example. 2018 में the small cap index was down 30%. Now, if in that year you went to investors and said, "Sir, let's make a small cap heavy portfolio," I think 3 out of 10 would have heard you. Maybe 2 out of 10 would have acted on it, right? And we all know that from there, small caps have done phenomenally well in 21, 22 and probably delivered a very strong return. But behaviorally, it becomes very difficult. Clients become a little momentum chasing where उन्हें लगता है अगर large cap ने अच्छा किया है तो ये they will continue to do well. Small cap गिरा है तो शायद और गिरेगा तो फिर बाद में देखेंगे and all those things, the excuses come through. Multi-cap as a product overcomes these challenges because यहाँ पे the regulators define that you have to have 25% minimum allocation to large, mid, and small each. What this does is it forces you to rebalance your portfolio every time something outperforms and some segment underperforms, right? So, for example, if at the beginning of 2022 you created a portfolio with let's say 50% large cap allocation and 25 each in mid and small cap. Now, mid small caps have done relatively okay, but large caps have outperformed. So at the end of the year, maybe your 50 in large cap became 55 or 60, and mid and small cap collectively became 45 or 40. So now today when you're sitting to rebalance at the beginning of 2023, you will actually sell out on large caps. तो आप अपना large cap exposure कम करेंगे and you will buy more small cap. तो small cap में exposure बढ़ाएंगे. So होता क्या है आप जो हमें जो theory में बताया जाता है कि buy low sell high वो ये fund आपसे automatically करवाता है. So emotionally is a very challenging thing to actually buy low and sell high. This fund forces you to do that, and to that way it's a system that's designed in such a way that it makes you behave right without the emotional toll of having to behave right? So I think it's a great product in itself and a great category. It's a very small category today. We have only about 8-9 funds, so we think there is a reasonable white space here that we are trying to address through this NFO. So that's how we've come up with this product. In terms of what we are trying to do with the product, just a couple of quick points. We've defined our house philosophy as growth at a reasonable price. So we other than the two extremes of investment philosophies, which is growth at any price and deep value, we are able to straddle different price points. So long as we are getting a reasonable growth and a reasonable valuation, we are able to buy high quality companies. We are also able to get into PSU names so long as there is growth and valuation comfort. And the outcome of this is that if you see over the last 3.5 years, most of our funds, about 70-80 of our percent of our products are leaders in their respective categories. So that's I think the first reason why you should look at this. I think we have a pretty well defined philosophy that helps us participate in a market that is a growth oriented market, as well as in a market which is a value driven market like it was over the last couple of years. So in both these market scenarios, we are able to participate well. Second, what we are trying to do in this portfolio is bring a very new and a very bottom-up thought process to portfolio construction, right? If you can just jump to slide 24, what we are trying to say is that we'll break our portfolio into three components: earnings stability, earnings upgrades, and earnings turnaround, right? Each of this will form a significant part of the portfolio. About 40 to 45% will be in the first category, which is earning stability. Whereas the name suggests, we'll buy companies that are stable. साल दर साल इनकी जो earnings हैं वो 10-12% पे consistently grow कर रही हैं. This provides stability and probably a decent market link return to this segment of the portfolio. Then we come to the second segment, which is earnings upgrades, where we think about 30-35% portfolio allocation could be to this segment, where we are saying we'll try and play a lot of these cycles that all sectors go through. Right? Typically, you'll have a up cycle and a down cycle in a sector. Some sectors go through very short cycles. These are interest rate sensitives like banks, autos, where you'll have 1-2 years of down cycle and a couple of years of up cycle. So all those cycles will play in this segment, and try to capture that higher beta here. These are all high beta segments. So if the market does X, these tend to do 10% or 15% more than X, which is how we kind of look at this segment. So this is where we get beta plus a little more from the market. And then the last segment is earnings turnaround, which we think is a pure alpha play, but we are saying we'll try and dip into companies, sectors, or industries that have been through a reasonably long downturn, where earnings have taken a hit for the last 4, 5, 6 years, and we think from here the earnings have bottomed. There is no immediate catalyst that in the next 6 months to 1 year the earnings will look up, but we think they can't get worse from here, and over a period of 2 to 3 years, they will mean revert to normalization, and therefore you'll get a big upward delta in earnings. For example, in 2017 and 18, it was becoming reasonably clear that the banking sector was probably hitting its bottom in terms of NP recognition. At that moment, you didn't have any clarity as to how the banks would turn around from there, but you knew that it couldn't get worse. And so if you took an exposure from there, I think a lot of these larger banks today, frontline names are up 3-4x from those price points, right?
Right.
So there's a big alpha that can be created by looking at this segment. So we think about 15-20% of our portfolio could be allocated here, and that would be the pure alpha generation portion of the portfolio. But typically, when you look at mutual funds, you hear about sectors, index, underweight, overweight. I think we are bringing a fresh thought process here, where we are saying it's a very bottom-up school of thought, where we'll build our portfolio based on how the earnings are behaving, and not what constitutes our index. So I think it's a very differentiated thought process.
Wonderful. So, I mean, this is something that seems like a very deeply thought through process, जहाँ पे stability, upgrades and turnaround तीनों चीजों की बात हो रही है. So, while we talk about this, and while we are at your fund, Tejas, is couple of points that I'd like to also sort of have a quick chat with you on. Is that when we talk about a multi-cap strategy. Okay, we believe that it creates a lot of constraint for you as a fund manager in terms of what market cap oriented stocks you can pick. So why would somebody want to consider a multi cap strategy and not a flexi cap? What would your take on that be?
Right. So I think theoretically, yes, multi-cap is a bit of a constrained strategy, and flexi-cap is actually more flexible, that it allows you to go wherever you want to go. To
Right.
that extent, even a tax saver or an ELSS category is a pseudo flexi-cap category, because there are no restrictions. You could do whatever you want. Having said that, I think the data suggests that when you look at both these categories over the last 5, 7, 10 years, they've typically been very large cap oriented categories, right? Because that is where the liquidity and the comfort for most of us remain. So if you look at portfolios today or over the last 4, 5 years, on average, these have been 65-70% large cap exposures, and much smaller mid and small cap exposures. Whereas in a multi cap, the most I could have to any segment is 50%, right? So I can't go beyond 50% in either large cap or mid cap or small cap. So to that extent, I think a multi-cap is a much more balanced portfolio, and also given that it gives you more exposure to mid and small caps, I think it has the ability to over a cycle to deliver better returns compared to the other two categories, simply because you have more exposures to mid and small caps.
Great. And from your portfolio construction standpoint, while there are minimum and maximum criteria which are defined by SEBI in terms of कौन से market cap में कितना पैसा
Yeah.
होना चाहिए, कितना percentage fund को allocate करना चाहिए. But what do you think is the orientation of the fund rather? Okay, if the model portfolio would have been constructed, let's say if you go back in time and back test this kind of strategy to build a portfolio, तो इसमें कौन सा market cap में overweight होगा आपका fund?
So I think in our view, the right combination is about 40 to 45% large cap, 30 to 35% mid cap, and about 25% small cap. That is a combination that has worked well over the last 15, 18 years, which is the testing that we've done. So I think that's the ideal allocation. Obviously, based on market conditions, based on available opportunities, we could tweak this by 4, 5% here and there. But we think longer term, this is the ideal mix that we will that should be driven in the portfolio.
All right, sounds good. And the other thing is that considering the kind of market cap, spread that you're talking about, how do you think will be the volatility of this portfolio? Is it going to be a portfolio that's going to be, is it going to be a fund which is chasing returns, or is it something which is going to give a smooth experience? While we know markets will never allow things to be smooth, but how is your, what do you think about this? Is it going to talk about risk-adjusted return, or is it going to chase returns?
Right. So, interestingly, when we looked at the history and when we looked at historical data, so what we did was we looked at each of these three segments: large cap, mid cap, and small cap. And then we said, let's build a composite, and that is where our 40-45% large cap, 30-35% mid cap, and 25% small cap allocation came through. Now, if you were to look at these four categories, which is the three market caps individually, and then a composite, the composite has consistently been the second lowest volatile amongst all the three categories.
Okay.
Okay. So in fact, what it does is it not only gives you a better return profile, it also smoothens your journey. In any year, if you look at the drawdown of the three segments, right, and typically we know that small caps tend to have more drawdowns, but there have been years where small caps haven't corrected and large caps have. Again, this category has always been the second lowest in terms of drawdown. So I think from a
Okay.
risk adjusted return perspective, or from a stability perspective, this is going to be a very smooth journey rather than looking at any of the three segments individually. I think this portfolio will deliver much more stability to the overall investor experience.
Wonderful. I think also at this juncture it's very important कि हम हमारे सारे distributors या investors जो ये video देखेंगे, it is very important to mention that while the fund manager are doing their best to sort of contain the volatility in the portfolio, हम सबको ये तो चीज definitely याद रखनी चाहिए कि when we look at equity as an asset class, okay, तो 5 साल का मेरे हिसाब से horizon हमको रख के ही चलना चाहिए, because that is what data also speaks, right? Tejas, you can add. I think 5 year period is where, irrespective of how the market goes, when somebody starts an investing journey, if they have a 5 year journey, the market is always going to correct to mean, so that the wealth creation process continues to happen over a long term. So I hope you're with me on that, right?
एब्सोल्युटली आई थिंक मार्केट में आप जितना छोटा इन्वेस्टमेंट होराइजन रखेंगे उतनी ज़्यादा वॉलिटिलिटी पाएंगे, एंड जितना लंबा होराइजन रखेंगे उतनी कम वॉलिटिलिटी पाएंगे. इनफैक्ट देयर इज अ लॉट ऑफ डेटा दैट फ्लोट्स अराउंड, राइट, दैट अगर आपका इन्वेस्टमेंट होराइजन 7 या 10 साल का है तो आपकी जो प्रोबेबिलिटी है लॉस करने की मार्केट में, हिस्टोरिकली वो क्लोज टू जीरो रही है. लाइक हिस्टोरिकली कोई इन्वेस्टर ने कभी 7-10 साल में मार्केट में लॉस नहीं बनाया, एटलीस्ट एट एन इंडेक्स लेवल, राइट. सो
Right.
आई थिंक that should be your aim, that should be your ideal investment horizon.
Thank you for substantiating that point. It's important for us to keep saying this to all our investors, because again, from a horizon perspective, it becomes very, very important. So we keep going back to them on this point. So again, coming back to your, fund components or construct, Tejas, is, I mean, it's a multifaceted question that I'm asking you. So, आपके fund में what are the typical sector allocations? Okay, yeah, sector weights, what your fund would probably have. Second, while it is very difficult to capture all sectors in a particular fund, so when the fund size goes up, obviously you will be able to capture a lot more. But primarily, what are the sectors you're trying to capture? And आपके हिसाब से what are the sectors that are going to do well over the next 3 to 5 years? So we'd like to have your view on it.
श्योर सो आई थिंक सेक्टोरली जो हमें लगता है कि हम जो इकोनॉमी के साइक्लिकल सेक्टर्स की बात करते हैं, राइट, एवरीथिंग दैट इज साइक्लिकल डज वेल इन एन इकोनॉमिक रिकवरी फेज, एंड हमें लगता है इंडिया में अभी भी एक इकोनॉमिक रिकवरी चल रही है. So all your cyclical sectors should do well, right? Now this is banking, real estate, cap goods, the automobiles, building materials, and so on. We think these are the sectors that you will find a better representation in the portfolio. These are sectors that are already well represented in our existing portfolios, and therefore you should expect that you will have a good representation from these sectors in the multi-cap fund as well. Too soon to talk about allocations. I think that we'll get there when we build the portfolio, depending on what the market conditions are and how valuations are. But broadly, I think this is the direction that we want to go into. Having said that, to answer your second question कि कौन से सेक्टर अच्छे लगते हैं या किस सेक्टर की तरफ थोड़ा ध्यान करना चाहिए, I think one bit of caution that I want to drive here is that over the last 2.5 years in the Indian market, अगर आपने सेक्टर सही पकड़ा तो आपका अल्फा बन गया. स्टॉक पिकिंग डिडंट मैटर एज मच. कोविड की से जब रिकवरी हुई तो फार्मा आईटी में हमने रैली देखा, एंड देन a lot of other sectors caught up, and eventually banking was the last one to catch up. Now, when these rallies happened, it didn't matter which stock you had. All stocks did very, very well. It was more a rising tide lifts all boats kind of a scenario. I think यहाँ से these kind of sector alphas may come down, and stock specific alphas will go up. So your stock picking will matter more than your sector picks, right? So being in the right sector is not going to be enough. Being in the right stock is going to be very, very important. And this is especially true, we've historically seen कि जब भी market थोड़ा सा sideways हो जाता है या थोड़ा सा volatile हो जाता है, तो थोड़ा सा stock picking matter करने लगता है. And I think that is the phase of the market that we are getting into, that we've had one sharp recovery in the market over the last 1.5 2 years, where sectors across the board did well. But यहाँ से the story is more about stocks and less about sectors. So that's a little caveat that I want to leave your listeners with कि while we keep talking of sectors always, I think from here on stocks within sectors will also become very important.
So finally, against the trend of the last 2 years, this is the next few years are going to be a stock pickers market. So that's what you mean.
Yes, absolutely.
Okay. Broad market rally हम देख ही रहे, but this is going to be a stock pickers market going forward. Wonderful. So another question, Tejas, is from a timing perspective of this NFO. Okay, we've seen a lot of global uncertainties from a geopolitical perspective हो या कोविड के हिसाब से हो या इकोनॉमी स्लो डाउन, हायर इंटरेस्ट रेट्स की बात करें, lot of such aspects which seems to be against the trend of the capital market or the way we like it. Okay, but what do you think from a timing perspective, and from that standpoint, what's your take?
So short answer, Anand, is that you can either have good news or good prices. The two, they are never together. So I think bad news is always a good time for us to invest. We've seen that historically, that whenever there have been global uncertainties, if you've invested in that period, you've made a decent return over the next 3 4 years. Even if you look at law of averages, if the last 1 year has been a single digit return year, and we continue to see volatility this year as well, then by simple law of averages, next 2 3 years should be above average because we are below average today. So I think timing perspective, one can never be perfect, but it doesn't look like it could get any better than the current time to kind of look at lump sum investments into funds, and therefore I think the NFO couldn't have been better timed really. But having said that, I think we've been very conservative investors. We've been very careful of the kind of valuations that we pick in our portfolio, and so even if the market was to run away from here from by the time we get to the end of NFO and deployment, I think we will build that conservatism of valuation in our portfolio. So it's not that we will chase. We've demonstrated that in a lot of our NFOs, right? पिछले 3 4 साल में हमने काफी NFOs किए हैं ना, सब में investor experience अच्छा रहा है. We've
Right.
not gone and chased stocks, and I think that's been that conservatism in the long run has helped us. So while in the short run you could see that we're a little slow in deployment, but eventually it's worked out well, and we're hopeful that that is how it will continue to be.
Wonderful. So one last question for you, Tejas, is, we all know that while the universe is small, I agree with you, but we all know that there are multiple multi-cap funds in the industry. So if I have to ask you, why should somebody pick Tata Multi-Cap Fund and not any other multi-cap fund which already has a track record? So what would your say on that be?
So I think two things. One, that we as a house we have a decent track record of managing funds. Like I said, we've defined a nice investment philosophy, and we've as a new team delivered good results on those investment philosophies. I think across the board, 70-80% products are above their peer averages, which speaks that it's not an individual fund manager, but it's the entire house philosophy that's doing very very well. I think that's one of the first reasons why we think you should look at us. Second, like I said, we are bringing a very different thought process to the way that we are going to build this portfolio. It's not about underweights, overweights. It's about how earnings are going to behave. It's a very bottom-up thought process, and like I said, I think from here the market also becomes a stock pickers market or a bottom-up market. So we think
Right.
there's a good match of the way we are trying to build the portfolio and what the market is trying to behave, and hopefully we'll be able to take advantage of that for our investors. And then the third thing is that there are two fund managers for this portfolio, myself and our CIO, Mr. Rahul Singh. And when you look at our products individually, right? So he manages the Balance Advantage Fund, which on the risk spectrum is probably at the lower end. I manage the LSS, which is probably a medium risk kind of a product. You invest with a 3-year kind of a horizon. And then he has a business cycle fund where you're trying to capture a lot of sector cycles and so on and so forth. I think together both of us have the ability to straddle the entire spectrum, so we can do a very low risk kind of a product like a BAF, where it's for a conservative investor, to a very high risk kind of a product like a business cycle, and a long term oriented product like ELSS. And the two of us come together and bring this thought process into one single fund, and which is where I think if you map this to earnings stability, earnings turnarounds, and earnings upgrades, I think you will see a reasonable reflection of each of these individual portfolios coming together into one single portfolio. So you're getting a good combination of two fund managers that can manage different or straddle through different risk profiles.
एक से भले दो. Wonderful. So,
That's the
so
theme. That's the theme that we are going with. That a lot of times 1 plus 1 is not 2, but एक और एक 11 हो जाता है. So that's what we are trying to say with a multi-cap product.
absolutely. And I think as a group also, Tata as a house itself has a fantastic reputation from a group perspective, and Tata AMC from a Genesis standpoint. Okay, I've been observing Tata AMC for a very very long time, and I've seen that the thought process from a fund management standpoint, or how the AMC runs its business, I think has been quite stable, and we are really looking forward to this NFO. And if we have any questions that come, we'll obviously send them over to you all so that you all can ably answer those questions for us in the form of an FAQ or something. But it was wonderful chatting up with you, Tejas, and it does give us good insight into the strategy, and I'm sure this will attract a lot of attention from our investor and advisor community, and we look forward to contributing to our might to this fund.
Yes, absolutely. Thank you so much for having me. It was a pleasure chatting with you, Anand, and we look forward to your support.
Pleasure. Thank you so much, Tejas. Much appreciated, and good luck for your NFO.
Thank you very much.
Thank you. Take care. Bye bye.
Bye.